Okay, let's recap some trades here. So, these trades are gonna be dating back to the 20th of last month. Okay, so this was exactly on the 20th, this first trade here, and it was basically an airplane setup on SPX. Okay, looking back on this, this was not the best, the highest quality setup here. And one important thing to know is the fact that the setup was actually on SPY, and I accidentally thought that I was on SPX. I took an SPX contract on this, but it was a SPY setup that I was looking at. And what's important to note here, this is the screenshot from the Discord that I had posted, is the fact that I took this on an extended hours chart on SPY. So that's why it looks kind of different on what I was originally looking at. And the reason why I thought this was a better quality setup is because on the extended hours, it does show that price breaks out from the hourly trigger and sets up an airplane here. It's the first airplane setup after the hourly trigger break. Whereas if I was looking at the original hours chart, right, which basically shows the same on SPX here, all you get here is elevated hourly velocity, right? We have price bouncing off the hourly trigger, which I don't think kind of gives the same effect as just price breaking out from the hourly trigger. Say it's from like a 3 trigger cluster or something like that, but I think that's part of the reason why this didn't have a huge follow through. I got out of this very quickly for like $100 gain here. But I mean, just looking at how this was setting up on SPX here, or a SPY regular hours chart, right? Price is very extended from the hourly trigger. Typically, when that happens, you shouldn't expect to see a huge move out of this, right? If I would have gotten out once price closed back below the 1 minute trigger, I probably would have exited for a loss. But good news is that I think I took profits on this candle here once we started seeing a quick move up. Okay, so the reason I'm showing this like this is because my trading view doesn't let me go as far back on an extended hours chart. I guess whatever plan I have doesn't let me go that far back, but I did take this on an extended hours chart. The reason why this setup is cleaner on the extended hours is because price had broken down below the hourly trigger. This is the first bear plane setup after that hourly trigger break, right? So this is the better example here. And this is pretty textbook, right? We have price coming up, mounting the 1 minute trigger here, trying to revisit the 5 minute trigger. Entries, the candle closed back below the 1 minute trigger. I got out of this very quickly. The number one thing that I need to improve on is letting runners run, right? So leaving some on the table to close out when price decides to mount the 1 minute trigger again. All right, so just showing on here because it's I guess easier to see versus that screenshot. But I got out, I think, one of these candles here fully. What I should have done is basically take partials on the way down, which I think is the best thing to do, especially when it comes to scalping with triggers, right? Like short dated options. Just because a move like this here, even though you didn't close back above the 1 minute trigger, but because of how fast these candles were, you probably would have been slightly in the negative here, right? So that's why I think it's important to take profits on the way down, right? Maybe take a majority of your profits once you see close to like a 2 or 3 risk to reward ratio, and then just ride the rest down, right? But like I said, I think that's the number one thing that I need to work on, is the fact that typically I don't have patience to wait for a full play for a play to play out like this. But yeah, I took full profits here. I believe that was $180 profit that I took there. Okay, so 2 plays on SPX here, same day. This is a rejection at the hourly trigger. right? The reasoning behind this setup and entering this setup is because hourly velocity is still strongly positive here. Price is holding the hourly trigger while the 1 minute trigger comes down into the hourly trigger. Entry is a candle close back above the 1 minute trigger, and typically you can target the 5 minute trigger for this trade. It's kind of the reason why I really like this trade, is because it's providing a take profit level, whereas bear planes don't necessarily do that. Okay, I got out of this very quickly as well, because one solid thing about triggers, one very important thing about triggers, right, and the reason why they help you keep risks very small is because typically once price mounts the 1 minute trigger for an entry, you tend to see pretty quick acceleration, right? So a lot of times you don't even see any drawdown, and especially if you take profits on the way up or down, right? So I got out of this position very quickly, and I took full profits just because these two candles here moved very quickly. I'm not sure what happened here. I must have taken this with very out the money contract, because I got out of this for like $50. So I'm not sure what I did there. I really should have been I should have gone in this with a bigger size, and I don't know. I think maybe I didn't wait much. I don't know if I was maybe because I saw this, I can't remember exactly because it was last month, but I may have seen this hourly velocity print, how it decreased significantly, so I got out with this candle right away. So I didn't wait it out a little bit longer here. But that's not the best setup, right? There's no 1 minute divergences. Also, 5 minute velocity is repairing, but it's not, I mean, it didn't see significant repair until this here, which would have been a fake out, because that's when price decided to come back down. Okay. This here, out of all the setups that I'm about to go over, is probably the most textbook one, right? So the main thing that I like to see when it comes to these plane setups, is our 1 minute divergences, right? So when I see this, I get pretty excited, just because it typically means that once you get the 1 minute candle close below the 1 minute trigger, price usually follows through. You get a really nice move, right? But this checks all the boxes for me. So it's the first plane setup after price breaks the hourly trigger. Okay, you get price coming back up, attacking the 5 minute trigger, and respecting the 5 minute trigger, by the way, so it doesn't pop above, right? We get the 1 minute divergences that I was referring to. So this is the highest 1 minute velocity print. After that, price basically makes two new highs here, while 1 minute velocity is starting to come back down. We get a very nice decrease in hourly velocity here. That's before we get our entry, right? So you enter this candle here, we have 1 minute velocity divergences as confirmation. We get 5 minute velocity decreasing again as confirmation. We also have the hourly velocity confirmation to the downside here, along with this being the first plane setup after price breaks the hourly trigger. Quite honestly, from my experience, it is very rare to not see this play out. Looking back on this, I should have taken this with larger size. I forgot. Let me see how much I made on that play there. Okay, not bad. It was a $270 gain, and I didn't even see this all the way through, right? So I did miss out on this really nice candle here. Like I said, what I need to work on, and I used to do this more before, I don't know why I stopped doing it, is recently whenever I see a really nice candle to the downside, a really nice push, I take full profits. But I feel like, especially when it comes to scalping, just because of how quick short dated options can move, right, it's important to take partials on the way down. But yeah, this is textbook, If you wait for this setup every time, which I feel like happens at least once a week, maybe once or twice, sometimes 3 times a week, on indices, right? Your success rate would probably be in the 90s, right? Like 90% of the time, this play plays out, right? It's hard to lose money on this, right? And as you can see, there wasn't even any drawdown, right? So you were in profit the whole way down here. Okay, this next setup here I should have avoided, right? Looking back on this setup, it just wasn't the highest quality setup. But the main thing I was looking at here was the fact that price was making 1 minute divergences while attacking the hourly trigger. One thing that's harder to gauge, and I feel like you just get used to this over time, is the difference in new velocity prints compared to like older ones. And I don't know if that makes sense, but what I'm referring to is the fact that 5-minute velocity here is very, very strong, while the 5-minute trigger is not that far away from price here, right? So this wasn't the highest risk reward ratio, right? And I know that's just kind of hard to call, but we also have the hourly velocity repairing pretty significantly here. So I took this even though I had this significant repair in hourly velocity. The only thing that I kind of had working for me was the 1 minute velocity repairing, right? Because I took this here and I think I got stopped out like right away. I didn't even wait for price to tap up here. I just price reversed immediately here, and I think I got out with one of these candles. But yeah, I mean, I think this was honestly just me being a little bit impatient, and I should have stayed away from this, but that was a $105 loss. Okay, this next trade I did not take, and I kicked myself a bit for missing it, but it's alright, because I mean, it just didn't make sense to me at the time. I don't know what I was kind of looking at, but I think I just saw it last second and hesitated. This doesn't have 1 minute divergences, right? So typically if I miss a play, and like I said, that's the number one thing I like to look for. If I miss a play and it doesn't have 1 minute divergences, I don't take it too badly, right? So number one plays I hate missing are the ones that have the 1 minute divergences, because typically those play out very nicely. But this saw a quick pop, not a full-on follow-through, right? So like I said, typically you can target the 5-minute trigger on these hourly trigger rejection trades, but it was a pretty nice move, right? So you get the 1 minute candle close above the 1 minute trigger, no drawdown over here, right? And like I mentioned earlier, it's important to take profits on the way up or down, because if you would have waited to take profit once price closes back below the 1 minute trigger, you probably would have ended up negative here. But this was a nice quick move here, and I could have secured some really nice profits. That's all right. This wasn't the best, highest quality trade. Okay, so this was later that same day. First bear plane setup after price breaks the hourly trigger. This was not the best setup, I think, because price does come up and try to test a 5-minute trigger, but the triggers were not so tight here. Right, so typically you see a bigger move, a quicker move if the triggers come closer together here, right? Typically you want to see the 1 minute trigger come into the 5-minute trigger like this here before price goes back down. But this saw a decent move. I think I got out once I started seeing this candle starting to attack the 1 minute trigger here. And although this wasn't the best setup, the good news is that it was basically break even. It was a $19 profit on that trade there. It just goes to show how triggers basically make it pretty hard for you to lose money on a lot of these setups. Right, it keeps risk pretty tight, and that's on a 0 DTE, right? So okay, so again, nothing new here. This is the first bear plane setup after price breaks the hourly trigger. pretty textbook. Kind of looks like the other one that I mentioned was got basically checked off every box. The only box that this setup didn't check was the fact that there was no 1 minute divergences being made here. But this still saw a very, very nice quick move, right? And this is typically what I like to look for the most. This is typically why I don't wait to take full profits once price closes back above the 1 minute trigger. And I a lot of times don't hold runners, just because a lot of times you can get a move like this, right? So I entered this candle, and this was probably a 100% move, right? Just in 3 candles, because price tends to accelerate once it breaks back below the 1 minute trigger. But this basically had hourly velocity confirmation, so we saw a significant decrease from the previous hour here. A lot of times this is important to point out, right? So I think I entered this candle. This candle here did not have 5 minute velocity confirmation, but that's all right. And so typically what I do is I enter the candle even without the 5 minute velocity confirmation. I do know that the 5 minute velocity confirmation is coming, right? So this was at 108 here in the next 2 minutes. So what I'll do is maybe enter a small position with a stop loss being back above the 1 minute trigger. I wait out the 2 minutes. If we get a nice confirmation and price is still up here, I'll add, right? Unfortunately, in this case here, price kind of already started moving up, but a lot of the times price will still be hanging up here, and you can add to the position, right? But this is probably what I did. It looks like this was a $244 profit on this trade. Okay, so and I can't remember exactly, but my point is that a lot of times you can enter small if you don't have the 5 minute velocity confirmation. You wait for the next print, and if price hasn't moved too much, you can add. Right? I think that's a huge thing that I do when it comes to these trades. A lot of times you get lucky, right? So a lot of times this candle here will be with the 5 minute velocity confirmation, and that's when you can go pretty big size with these trades, especially if risk is really tight and all these other boxes are checking off when it comes to entering one of these plain setups. Okay, so this trade here, I traded very poorly, just because it's pretty textbook, other than the fact that the triggers weren't so tight here. But we have the first bear plane setup after a 3 trigger cluster, right, which typically provides a very strong move in any direction. And you can be confident in entering a plain setup because price in this case, right, is in a strong downtrend. So any move back up to the 5 minute trigger and a close back below the 1 minute trigger, you can be pretty confident in. What happened to me here is that price was very choppy, so I just got impatient. Right? I think I waited all these candles here, maybe basically 6 or 7 minutes or so, and I got out. I think I got out for like a $12 gain, so basically break even. But what this was basically, it was me being impatient, right? Because I like to look for the quick move. Typically, price breaking back down below on any plain setup provides us a quick move, right? So price hanging around here for many candles in a row basically made me vulnerable to a very quick loss, right? So I don't know, it's just typically this is supposed to result in a quick move down, and a lot of times when price is stalling like this, you could get a quick candle to the upside, which will make you take a 20-30% loss in an instant. So that's why I exited this early, but this played out pretty nicely, right? I just had to wait it out. I think I got out over here once I saw that 5-minute velocity was not decreasing anymore, right? Which is a lot of times a good signal to take full profits too on these plays. So, but I'm not mad at this, honestly. I'm just glad I didn't take a big loss, even though it was a pretty good setup. This was, I think this was yesterday. Yeah, this was yesterday on QQQ. Okay, so one thing to notice here is that, of course, it's not the first bear plane setup after price breaks the hourly trigger, right? So that basically didn't happen. We didn't have price breaking the hourly trigger. Okay, the reason I entered this trade mostly was because of this hourly velocity print, right? So it's in a steady decrease here, huge significant change from the previous hourly velocity print, and the triggers are pretty tight, right? And this is even a 1-minute divergence. So this checked a lot of boxes. It just didn't work out because not all trades work out, even if it's an A+ setup. But I was in profit there for a little bit, but we had a quick snap back, and this stopped me out for $150. All right, so this didn't have the 5-minute velocity confirmation, right? 5-minute velocity started to decrease here, or I guess it kind of did, because this is the highest print. It decreased here, right? And so I entered, but got stopped out, which is okay. But yeah, quick little recap on all the trades that I've taken since last month, and I hope that helps.